Hey guys, good afternoon, everybody. Today is Monday, August 29th. It is 2:02 right now. Our scheduled mentoring sessions for 2 o'clock. So we're starting a little late, just about a minute or two. So I'm just going to go ahead and set up this room real quick, and then we can get started with our session for today. So just give me 1 second to get everything done. Looks good. Looks good. I'm just going to update this right here, and then we should be good to go. All right, solid. Looks like everything is pretty much ready to go. I'm gonna get this link sent out to you guys right here in the premium so that we can get started shortly. So right here. It's good. Here. Looks like we're good to go. All right, cool. So I'll give it a few more minutes for people to make their way in. And as people join, we'll get started. So if you guys have any questions, feel free to put your questions in the chat. Otherwise, we don't really have any questions lined up for today. So we got a few minutes for people to join. As people join, I'm going to go ahead and just respond. I'm going to be a couple people here in the chat. See, Patricia and Sean FY, be very careful with MFF. Shit going down over there. I know because they're using the same CRM we're using. They're having a lot of issues, including payout issues now. Be another funding talent. Definitely make sure. All right, cool. iPad said I would like to see different moderate candlesticks. Yeah, sure. We'll do that. So that will be our first thing to look at today. Other than that, if you guys have any other questions, feel free to put them in the chat. It's just Peter and iPad right now. I'm not sure who iPad is, but yeah, I'll refer to you as iPad unless like you want to change your name on Zoom. Otherwise, it's fine. You can leave it as is. Solange just joined. So I got a few more. John just joined as well. So let's give it a few more minutes for people to join. But as people continue to join, we'll take a look at moderate candlesticks. So I'll show you guys examples of moderate candlesticks.
Tanya.
Yeah, the one that don't say nothing.
There.
Okay, let's go wash our hands.
First, I'm just going to show you moderate candlesticks without like actual entries, right? I'm just going to show you that so that you can see them a lot better. Take everything off the chart. And then I'll show you some examples with actual entries regarding the moderate candlestick. So let's see.
No. You don't.
Mama. No.
I'm looking for like tricky looking ones so that they'll explain a lot better. So I'm just going to go backwards in time and see. Oh, it's Lanji. Or yeah, let me mute everyone. Sorry, let me just mute everybody. 1 second. Let's mute on that. One second, guys. Sorry, I forgot how to. Oh, here we go. Okay. Forgot how to mute everybody on here, like once the actual thing started. All right, let's see. CERN said, Sean, your voice has changed. It might be someone else. It's John. It's okay, John. It was the baby. Yeah, it's definitely not me. Man, where's the button at? Sorry, guys. I forgot how to like. I don't know if anyone else is joining, but okay, here we go. Sorry, my bad. Got it. All right, all done. All right, so yeah, no problem, guys. You guys are good. Anyway, so the only question that we have right now is from iPad. iPad's asking if we can go over moderate candles. So what I'm going to do first is I'm going to go over just candlesticks to show you what moderate candles look like. And then after that, if we can see some actual entries, then we'll go over that as well. But for right now, we'll start with it's probably best to go with examples, but if I can't find one, we'll just have to go with like what we can find. So like, for example, right here, I know this candle is kind of small. Like if you look at it from a normal candle size, it looks small, but if you zoom in a bit, it looks a bit better. So for this right here, and I'll just do a moderate candle criteria. So for one, you want to confirm wick in direction of trade is not bigger, not same size, not large. I'll just put larger than candle body. Two, confirm candle is not a doji. I'm trying to figure out what's another explanation for doji. I'll just say C explanation. I know most of you guys know what a doji looks like, but it's hard to really like. I need to figure out another name for it. Not a spinner. I don't know if you guys have another name for doji. I mean, if not, I'll just try to show you guys an example. Cross plus. Yeah. Is not a let's say, yeah, plus or cross. That's probably going to be best. It's better if like people understand, but we'll try to go over that and I'll show you guys what I mean by that. So wick, confirm wick in the direction of trade is not larger than candle body, not a doji. Very large wicks both sides. I think that's the only criteria. I mean, looking for a moderate candle is not really that difficult. I know it's a bit subjective, but I think that should be good for now. If you guys have any other like examples or anything that you think is necessary, just let me know and I can add them to the criteria. But I think for the most part, this is pretty much it. So we're going to be looking at this candle right here and just analyzing this candle. So first you want to confirm the wick in the direction of the body of the trade is not larger than the candle body. So for example, here, since we're looking at a green candle, we're going to use this as an example for a buy entry, right? So we just want to look at the wick and you want to make sure that the wick, basically, this would be considered a resistance, right? Since we're looking for a buy in this situation, you just want to make sure it's not bigger or the same size as the body. So right here, you can see it's just 10 pips. And the body right here is about 4 pips, 3 to 4 pips. So that would be considered okay as moderate. It doesn't violate that requirement or criteria. For the second criteria, you want to make sure that it's not a doji. So this right here is not a doji. This would be considered somewhat of a doji, right? This one right here. So this is an example of a doji or a cross, or plus, or whatever you guys want to call it. But basically, it's not necessarily a doji like a reversal candle pattern, but it looks like a doji. So it doesn't have to be exactly flat. This would actually be more of a doji. So this right here would be a doji, but this would be a doji with a body. So by that, we're just identifying it as, so this would be an example of a cross, and this would be an example of a plus. So the way that we use this criteria in identifying the candle, you basically don't want a plus, cross, or doji with a body, meaning you have a body in the middle and then equal wicks on both directions. The reason why you don't want that is because that's going to be a reversal pattern, right? So for example, right here is a doji for a sell, and then price just swings back up. Same with this one right here. These dojis mean that price can go either way. But when you have something like this will show you that price is probably going to go the other way. So you wouldn't want to take something here. Same with this one here, same exact candlestick pattern. This right here is kind of similar to like a doji, but it has a body in between, right? So you can see price is pushing up. It gives basically a red doji, and this is a reversal pattern. So you can see price kind of just goes sideways for a bit and dwindles down, and then it swings all the way back up. So these are basically the things that you're looking not to take. Doji, or I'll just put doji with body. With body. Or body doji. And I think you guys pretty much understand that. It's not too difficult to really follow along with. So basically, couple things that you're looking for: not a big wick, not a doji, and then also you want to make sure that there's not large wicks on both sides. So let me just go over here and show you another example. I'll basically show you examples of what you're not looking for, because it's a lot easier to see what you are looking for versus what you're not. So no dojis, no bodies with no here's an example right here. No, so say you're looking for a buy right here. You don't want the wick in the direction of the trade, since you're looking for a buyer to be larger than the body, or even anywhere near the same size. So for this one right here, this one is about 10 pips, and you can see the body here is like 2 pips. So it's very close in size. This is one that you would want to skip. Let me go to like earlier in the session where like the market was actually moving. I think we'll find better examples over here. So let's see. Okay, so let me go over here real quick. So looking at this one right here, if we go down to the criteria, since it's a red candle, we're going to use this as a sell example. For this one, you'll see that the wick in the direction of the trade, since you're looking for a sell here with a red candle, you can see that the wick here is not very big, right? So it's not very big. It's probably about a few pips. Yeah, about 30 pips. So this is how big the wick is. And this is going to give criteria for how big the body is. 220 pips, right? So this makes a huge difference. For this right here, this is fine because this doesn't look like a candle where the wick's too big. Also, this is another example that is not a doji, right? So I'm showing you basically what we're not looking for, or what wouldn't satisfy one of these criterias for a for the moderate candle. Sorry, I got to change this. Confirm candle is not a doji. Okay, so as I was saying earlier, the dojis are basically cross plus candles or with a doji body, meaning this right here wouldn't be considered a doji body. I just want to clear the confusion up there. Doji body would be if the candle was like this big. Let's see if I could just draw it for you guys. I think this would probably be better than looking for actual examples, because I think us trying to draw examples is not gonna, it's gonna be harder to see. So let's just do this first. And I'll just color this. We'll leave it red for now. Okay, so I'm going to use this candle right here as an example for a red candle or a sell candle, right? So let me just make this darker. It's at 18, just want to make sure. Mess it up, put it back to 18 later. So here's an example of, and I could probably just make a copy of this. Example of wick too large to take trade. So I'll put, I think this is probably going to be better for us because I can actually draw the examples here and it's going to be easier to see. So let me see how big this is right here. So I'm going to show you an example. Okay, so say for example, you're looking for a sell right here. And you see a candle like this. That's the fun. Let's just move away from. Well, I mean, you guys can still see it. Okay, so here's an example of like when the wick is too large to take a trade. If you see a red candle like this for a sell, this is going to fit the first criteria, right? You want to confirm the wick in the direction trade is not larger than the candle body. So right here, the wick is about 380 pips, while the body is only 20 pips, right? This is going to be an example when you don't take the trade. So this is one of them here. Vice versa. I'll draw another body. I'm going to do it opposite now. Now we're going to color this green to show you an example for the other direction, right? So we have that right there. Okay, so right here is an example for when the wick is too large. So if you're looking for a sell here, the bottom wick's too big. This is going to be an example when it's too large to take the trade. Vice versa, if you're looking for a buy right here and the candle's too big on top, then that's an example for a candle not to take for a buy. So this is going to be like as clear as it gets with regard to that. Let me show you another example here. All right, so here's another example right here, when not to take the trade. Another example is when the wick is basically the same size as the body, right? For the example here, don't take this if because the wick's too large. For this one right here, it's also too large for a buy. For this one right here, the candle's large, the wick's too large for a sell. Another example for sell. It's going to be one like this, right? So here are examples of when the wick is too large to take a trade. For example, for a buy here, I mean, for a sell, if you're looking for a sell, the wick's like the same size as the body, you're not going to take that trade right there, right? Because the candle wick's just too big. For example, right here, you're also not going to take this because it's also too big. Same with the buys. So it's the same thing, just in opposite directions. These are exactly why you wouldn't take trades if the candle wick's too large. It's a bit subjective when you're looking for the actual trade live because you have to wait for the actual candle to close, but this is like main criteria right here. If it closes a little closer, then great. But if it's the same size or larger, you definitely wouldn't want to take it. Talanji's question is, so does the candle's rejection wick also need to be within the stop loss? Like if the middle green candle was red and you're looking for a sell, are you talking about this right here, Talanji? So you're saying if this was red, would I take it? Yes. because the wick here is not too, you don't care about this side. I'm just using this as an example here so that you guys can see the different types. You're looking for a buy here, right? Or for your example, you're looking for a sell. So this doesn't matter. This is completely irrelevant. Like you don't care what's going on over here, right? You can kind of just ignore this. You're really looking for what's happening on the bottom because that's going to be the resistance and direction of your trade. So you can just pretty much ignore all this up here. This will just be gray area. I mean, it's good to see sometimes because that's going to fit with the third criteria over here. So for example, right there, you don't really care. Like there's a wick there, but you're not really paying attention to that because that's pretty much part of the candle body. What you care about is down here. But if it's in the direction of your trade, then that's where you would you'd actually care, right? Yeah, no problem, Talanji. And that's good that you brought that up. That's why I was trying to draw them here because it's harder to see on the chart when you're looking for actual candles. But for example, right here, this is just showing you that when you're looking for buys, you just care what's on the top for the most part. And when you're selling, you care what's on the bottom for the most part. So here are examples of the candle wick being too large. As we get closer to the third criteria, this is where it'll make sense, like what you just asked about, Talanji. So yeah, no, exactly. Talanji said was just thinking about the possible retracement, but I guess that's only to the body. Yeah, exactly. Because if there's a retracement, then the body's going to be a lot smaller, right? So if you have something like this right here, this is one that you wouldn't take, right? That's going to be part of the third criteria right here. Very large wicks on both sides. The body's really small, a lot of wick on top, a lot of wick on bottom. This is a reversal pattern. So you get a green candle within the body. It's both same size wicks, and then you can see where price dumps right here, right? Because it's a reversal pattern. So other than that, let me just keep going along. So those are examples of wicks being too large. The next one is you want to confirm the body is not a doji. So use this tool over here. Oops. I'll just draw it by hand. Shouldn't be too bad. All right, so example of doji. So if you're looking for a body or a doji, I'll just draw a trend line, it's easier. So here are a couple examples of bodies and dojis, right? Well, I mean, this might be a little too big. Okay, so if you see a candle like this is considered a doji. Looks like a cross. For something like this, you're not going to take it because you don't know what direction price is going. You don't even know what the color of the candle is. This is going to be considered cross, right? Something like that. You want to skip these types of trades because these are uncertain candles. Like you don't know if it's going up, if it's going down, or whatever. So for something like that, you want to skip it. That's consider a cross. This would be considered a plus, a bit smaller. So you want to avoid trades like this. You also want to avoid trades with small bodies in between, something like that, right? So this is an example of a doji. It could be a cross or a plus. This is an example of a body doji. So it doesn't matter what color it is. It can be red or it can be green. It wouldn't matter. It just means the same thing. So like, for example, if you have a buy entry and the candle looks like this, then you want to skip it. If you have an entry like this and it's a red candle, doesn't matter what color it is, you just don't want to skip it. Right? So skip crosses, dojis, body dojis. I mean, whatever you guys want to call it, you guys will see that this comes up pretty often. The reason why you want to skip these is because these are all reversal patterns, right? If you see something like this, price can really go either way. Same with this right here. Here's an example of a body doji. Price kind of, you know, has same wick or larger wicks on both sides, small body, and then it just comes straight down. It's a green candle, so it's a reversal pattern. Same thing if you saw a red one, right? It doesn't always play out as a reversal, but typically it will reverse. That's why you want to avoid that type of candle. Here's an example where it's not, where it's okay. So here's an example of body doji. So this is an example of when not to take it. And then here's an example of when it's okay to take it. When the actual body's like pretty big. So say, for example, you have a body like that, and then you have a small wick on both sides like this, right? So that's fine. You can take something like that. This isn't a reversal pattern. The body's too strong. So it just had like some movement in between that kind of pushed price back and forth. But realistically, it's still an okay trade or an okay candle to take a trade because it's not a reversal pattern, right? So here's an example of an okay. So hopefully this is making sense to you guys. It's pretty much the same pattern, so it's not really too difficult. I mean, it's hard to get it mixed up really, unless you're like really, unless you're like really confused about it. I mean, we can go over specific examples, but it's like not that bad. Let me just show you one more example of like when there's large wicks on both sides. So example of large, or I'll say very large wicks on both sides. And this will be pretty self-explanatory because if you've seen entry like this, typically it's going to be too big anyways, and you won't be able to take the trade. So say, for example, you have a candle like this, right? This is going to be another example of like a body doji, but this is when the candles are too big. So this is what I'll do. Oops. All right, so you guys can see the difference here, right? So this body doji is okay because it's like, it's equal, right? It's the body's a lot bigger, even though it's doji, like well, it's somewhat of a doji, the body's still huge. So there's more body than candle. This right here looks similar to this, but the wicks are a lot bigger. For something like this, you definitely wouldn't take it. Typically, you would already skip this anyways because the candle would be too big, right? Typically, you want a 300 pip stop loss. So for example, if you're entering a buy here, right, your stop loss is typically 300 pips, right? If you measure something like this, it's probably going to look like that. The reason why you want to take a trade like this is because this is also a reversal pattern similar to the smaller dojis. And with this, two things will typically happen. Price will either go down to halfway of the candle right here to retrace, or it's going to go down to the entire bottom of the candle. So if you're taking a trade like that, like this is basically what happened today earlier. During the live session. Like if it retraces even to like half of the body and goes a little further, it can just stop you out before it pushes up to your profit target. And it's the same thing with, you know, if it pulls down lower to here. So either way, this is going to fit one of the red flags because it's going to be too big of a candle. So you'd have to either wait for it to retrace or just skip it altogether. Same thing for red candle. So if we were to do this, let me see. So let me just put this right here. And it would be the same thing. Doesn't matter if it's a red candle, green candle, still fits the criteria for both. So there's an example of a very large wick on both sides. Let's see. iPad's asking, is it possible to reduce stop loss 200 pips with a perfect setup? I mean, anything is possible, really. If you've tested it, then that's how you'd know if it works. For me personally, all the testing has been done with 300 pip stop loss. The reason why we use that is because the spread is too wide, right? If you're cutting it down, like say for today you were trying to take, like we were trying to take trades, and the spread was 190, right? Spread's 190. You have a tight stop loss at like 200 pips. Say if it pulls back in the negative even a little bit, you're already almost halfway to your stop loss, right? If not more. So I mean, if you want to do it, you can, if possible. Like we can't say for like it's never possible or it's never going to work, but you're basically putting yourself in a lot of hot water, because what will happen sometimes is it'll retrace, hit your stop loss, and then go straight to profit target. So short answer to your question is, it is possible, but would I do it? No, probably not. Most of the time the trade doesn't lose, so the stop loss doesn't really matter, right? So it just varies by the person, right? A lot of people want to be like extra precautionary and put a really small stop loss, but I can almost guarantee if you do that, you're probably gonna lose more trades than me and most of us here. And because it's going to hit your stop loss before it goes to that point. The thing with the stop loss is that it's variable sometimes. So that's why you want to be very careful. Like sometimes on a good day, it'll be like 130. On a bad day, it'll be like we're not really a bad day. On a moderate day, like today wasn't horrible. It was like slow and it wasn't really giving many entries, but the spread was like stuck at like 190 pretty much most of the day. As you get closer to market close, like right now, spread's like about 300. So, yeah, I mean, it just depends on like how you want it. If you want to do it that way, you can, but I personally wouldn't, and I wouldn't recommend you do it that way. If that was the criteria and that worked well, then that would have been the strategy, right? We've already tested the strategy with different stop losses, and 200 is too tight. So it works a lot of the times, because a lot of times it doesn't even go into drawdown, but if and when it does, which you can't really predict when that's going to happen, I think it would be too risky. So yeah, short answer to your question is yes, possible, but recommended, probably not. So yeah, I mean, do you guys have any other questions, or is there anything else in depth iPad that you want to go into regarding the strategy, or another question regarding any of these types of wicks? Because we have like all session today, so I don't have any other questions here. Like whatever questions you guys have, I'll go over your questions as in detail as possible. But I don't know what's like the main thing people have issues with. I know the candle bodies is one of the main things here, but I think having these examples right here pretty much clears up a lot of that confusion. So yeah, I mean, if you guys have anything else, just go ahead and drop your questions in the chat. Let me check the group over here to see if there's anything else. So Patricia was telling me that, and if you guys are just joining the room, Patricia just messaged me and she was like, Sean, FY, just be very careful with MFF. Shit's going down over there right now because, so the thing that a lot of people don't realize is that a lot of these funding companies, they use the same broker, right? If you guys have heard of 8cap, that's usually the broker that everybody uses. That's the one that MFF is using right now. And from what I know and what from other people know, because we do know other people who do own other funding companies that use the same broker, there's ways for these companies to manipulate execution times, spread, and slippage, right? If you have a broker or you're using a broker, you like white label something, meaning you start a company, like say if we did K2 funding, right? Or Kodi funding, I can go and like get the data from a company, and that's just what MFF is doing as well. So from what's going on behind the scenes from these other funding companies that they're seeing with MFF is that they're having a lot of issues with payouts, slippage, execution times and stuff like that. And all that stuff is all relevant because you guys can see the differences in profit, right? So if you look at my trades from today, so you guys want to be careful if you guys are using MFF. So here's my FTMO accounts, right? I kind of bounced back right here. I took another trade just to like cover my loss from today. This was off the session, so it's not going to count. This is just for my personal trading. But you guys can see that comparing my FTMO with the executions were on time to my MFF, I actually made more profit with MFF today because executing the trades late actually gave me more leverage. So like I was supposed to lose like 3,000 on this trade. I only lost 560. Blows my mind, whatever. But this is because the execution times were off. So sometimes it works in your favor, sometimes it doesn't. But I've started to notice it like the past couple of weeks. You guys can see that the trades have been like super off. My MFF's usually half profit. For here is half a loss. So it worked in my favor, but you know, if these were winning trades, I'd have half profit again, like I've been having for the past couple of weeks. So you guys can see the difference here. These are my two MFFs or two FTMOs. You can see that they're the same, right? Made a $2,700 loss on this account. On this one's about the same, 2,700. My MFF, though, on the other hand, only gave me 560 loss because it executed my trades later and there was some slippage. So you guys can see, I don't have TFF, so I can't really tell you what the other companies are doing. But Patricia, and she's probably reached out to you guys, right? So she here right now. So Patricia and a couple older members in K2, and I'm just going to give you guys a heads up now because I already know you guys are going to come ask me about this later because I know Patricia and other people are messaging people directly about it. So Patricia and a couple of the other members, older members of K2, admins of K2 basically, they're starting their own funding company. They're using the same broker as MFF. So they can kind of see what's going on behind the scenes, right? If they message you and ask you, if you want to try them out, that's up to you guys. I can't vouch for anybody right now because I haven't used it myself. They're members of K2. I can't say, how their ethics are. You know who's in the group. So like who's been around for a while. But before the questions start coming, like I can't give you guys any recommendations to use any of these other companies. The only company that I can recommend would be FTMO. So I can't say anything about MFF. I know they've been screwing up lately. I can't say anything about TFF because they were screwing up before. Supposedly they're better now, but I haven't used them in like a year, so I can't say. And then there's another company coming around, which is a smaller company, of course, started by a few members within K2. So, and they'll probably reach out to you at some point. So just heads up. But yeah, I mean, from them on their side, let me look up ACAP actually. Man, maybe I should just go start my own funding company. Okay, ACAP. I don't even like. So what I'm gonna do first is I'm gonna see how their company does. If they don't have any issues and they're good, then maybe at some point I'll start my own funding company. But for my funding company, it's going to be different. I'm not going to just let anybody sign up. I'm only going to let K2 members do my funding company, right? Because I'm going to teach you guys how to be the best traders so that you guys can take the same trades I'm taking. It's basically like me doing a bunch of accounts, but you guys are doing it for me. So I don't have to do an actual work. We all make money and it all works, right? Like it goes full around. So like instead of me having to have trade and then have like 10 copiers on my account on 10 different companies, it's a lot of work, right? I'm not trying to do that much work. I just want to make my money for the day and call it a day. So what I'm going to do with the funding company, if I do start my own, is I will make sure that you guys are really good traders because you guys are going to be trading my funding company, obviously. I don't want you guys to lose. So it's only going to be within K2 members because you guys are only going to be using my strategies and whatnot. So I'm going to make sure that you guys get everything down. You guys trade exactly how I do. So when you make profit, I make profit, right? It's going to go both ways. It's not going to be like funding companies where you can pay a challenge fee because it's going to be closed off. So I'm going to see how theirs does. If theirs does good, then I'll start my own. And then I'll just focus on whoever's within K2, make sure all you guys make a killing because I want to make a killing too. and then we'll figure out what the split's going to be like. Obviously, I'm going to get more because I'm taking all the risk here by starting the company, and putting the capital at risk. But you guys will be doing really good, so it's going to go both ways. But anyways, this is the company that a lot of them use, called ACAP. I don't know how it works. I just got to figure out how and what everything aligns. But this is typically the broker that a lot of these funding companies use. I know FTMO doesn't use them, but a lot of the bootleg companies basically use them, right? Like I wouldn't consider MFF bootleg, but they do use this company for data. TFF was using this at some point. They probably still are using them. But so here's the cool thing about this. You can actually use this on TradingView. So I would rather, or can you? Oh, I thought you could. Maybe it was something else. But a lot of the funding companies that you guys will see, they use ACAP. This is like literally what everybody uses. They sign up for ACAP. They just white label the company. It's like they're all the same funding company. They just change the name and use a different logo. But yeah, I don't know. I'll have to do some research, but eventually I will figure it out. I'll start our own funding within K2, and then I'll just focus on you guys. Like really, I'm just going to train you guys every single day to make sure that you guys are good. Because like realistically, if we all just applied like the K2SR strategy, I mean, like once or twice a day, everyone would make a pretty good amount of profit, because, from the spreadsheet that Maddie was covering, there's a lot more trades here. Like the only trades aren't just from the morning. Like there's a lot more that come on after that. At least where the spreadsheet's at. Yeah, like for example, I could trade with you guys from like 6:30 to 8, make a couple wins, and then call it a day. If you guys want to keep trading from like 8 to 10, I mean, you guys can literally just sit on for like a couple hours, take 1 or 2 trades, and then we all win, right? So you guys win, and then I take a cut of that profit, and then I just focus on making you guys better, because that's really what's going to be best for all of us, right? Like I'd rather have like people who are serious about K2, and I just make you guys the best trader possible, versus people coming and going within K2. It's a headache, right? Because having to train someone brand new is like, it's a lot of work. But if you guys are already in K2, you guys have been part of K2, you already know what we're doing. All I have to do is I have to fine tune your ability to trade, because you already know what's going on. So eventually that's going to be the goal. I just got to figure out how their funding company works, and I want to make sure there's no issues, because if that's the case, then it would make more sense for us to do that versus having to sign up for all these different funding companies and having all these different rules. So let's see. Yeah, Talanji said some people are making close to 8 figures a day with FTM alone. Even 5 figures a day is really good. Yeah, no, exactly, Talanji. And that's what I'm doing too. Like, I'm not really going for anything too crazy. I'm going for like a couple wins. Like for today, yeah, I had a couple losses, but I mean, I made it right back, right? So if I added up what I made today, so let's see. And this is across all my accounts. So I felt negative 490 minus 1,190. That's 1,680 loss, right? Over here on MFF, made 1,350. Oh man, here comes Steven with those questions. You guys can see my chat. Steven's like, is it safe to take a few variations for Asia session today? No, Steven, of course not. Message this guy a little bit. If you guys are on the live today, Steven was like asking if like the 1 minute trades were like 500 pips. They've never been 500 pips ever. So I don't know where these questions are coming from. Anyways, let me just add this up again right here. 1,460. All right, so for today, this is how much I made. I made a couple losses on my FTMO accounts, but I made it back on the MFF. Thankfully, slippage and whatever that's going on with their servers was on my side. But so this is basically what I want to get across to you guys. Like if you guys can do, so we do a 2,000, we'll do like 2 trades a day, right? So 1,000 per account times 5 times 2, that's like 10,000. If you guys kept trading and you took another 2 trades, then that'd be 4 trades, right? If you kept trading even after 10 and you just go for at least 2 trades that will possibly win, that's 6 trades, right? So 6 trades times 1,000, because we're all going to be using the bigger accounts, 6,000, right, for the day. But imagine all you guys in K2. So there's about like, how many members in K2? It's like 200 of us here, right? I don't know who's still active, who's not, but say, for example, like 20 of us did that. Or, yeah, I can use 20 people. So if 20 people were taking trades all throughout the day, I take 2 in the morning, 6:30 to 8. That'll be like my shift, 6:30 to 8. Someone else in the group gets about like another 2 trades and then another 2 trades. So like just say 20 people in K2 are trading on whatever funding company we had, right? And everyone had all wins, right? So 6,000 times 20. This is like in one day. So I'm thinking volume here, right? Like we could take 2 trades a day or 3 trades or 1 trade or whatever. And this is volume. So like, for example, if we were doing this and did like maybe a like a 70-30 split, right? So if we did that under 20K a day, and then I did this, I keep 70, I'll keep 84, and then say like the gets distributed to everyone else, 36K. That's not bad for a day. Obviously we're gonna have some losses, but for the most part, if everyone just sticks to the plan and not really lose, it would be pretty solid. So that's probably the next step. Once we figure out how these funding companies work. I just don't want to do too much work, guys. Like, I mean, honestly, the whole reason I stopped being a lawyer was to like work as minimal as possible. I really just work with you guys when it's not even work. It's like we're hanging out from like 6 to 8. I work for like an hour, hour and a half, and then I'm done for the day. If I can do that and profits can keep coming for the rest of the day, then why not? So yeah, certain. So that's based off 200K counts, right? Yeah, exactly. Certain. Because I'm trying to maximize it as much as possible, sir. And like, for example, if I'm going to be training you guys one-on-one, or like whoever is going to be accepted to our funding or whatever, I'm not going to try to, not going to try to make it easy. If I'm going to put that much time into like making you like a master trader, I want to go for the biggest count. So, yeah, exactly. 5 times. Yeah. So, I know it's harder for a lot of you guys because you guys are just not at that level where you guys are confident enough to take the the bigger accounts. But if you're going to get trained by me, I'm going to make sure that you guys actually get this stuff, because I think this SR strategy is like the easiest thing ever. It's like literally the easiest strategy. It just takes a lot of focus and a lot of discipline. Like, for the example, the trade today, this was like this is my bad. I just got FOMO. We were waiting for like almost 2 hours. And I just wanted to FOMO into this trade, literally. I should have seen that it was overextended. But there were just a lot of things that were pointing in this direction. So as you can see, it just really takes discipline. If we would have waited longer, because I entered like right here, right? I entered like way too early. If I waited for it to pull back to the full candle and we just caught it down here, it would have been a full TP, but it is what it is. Let's see. But yeah, let me see the other questions here. If there's any other questions that you guys need to, any other questions that you guys want me to go over, anything specific, feel free to let me know. If you guys are still not familiar with this SR strategy, we've gone over this pretty in detail the last 3 mentoring sessions. So it's a pretty easy strategy. I'm going to put the requirements over here. There's really it's really hard to screw it up. I feel like the only reason people screw up in K2 is because they try to do their own thing, right? Like, for example, I go over this stuff. Where is Maddie here? Maddie's not even here. But I give you guys like the exactly what to do. I tell you exactly what to do. And then what happens is people will be like, oh, I know supply and demand. They try to add like supply and demand or like order blocks and stuff. And what happens? They just blow their accounts because they do something completely different from what we're doing. I've been applying this strategy for like the past, I don't know, like month now. So if you look at the profits from like last week, let's see. I mean, like the trades weren't like we weren't taking a crazy amount of trades, but like if you look at like everything from August and everything from July, that's basically when we've been applying just this one strategy. It's been 29 wins and 2 losses, right? For the past 2 months. So, or 29 wins and 4 losses. So 29 divided by 33. It's an 87.8% win rate, basically an 88% win rate. This is like all that you guys really need, honestly. If you can focus on this and just do this, this will literally give you an almost guaranteed handful of wins each session, if not each week. Obviously, we're in the summer session right now, so it's a bit slower. But I mean, overall, it's been pretty solid, especially from August. I think this is when you mostly started using it because you can see the trades got a little bit smaller from June. Obviously, summer started, slowed down a bit. July slowed down a bit. And then we just changed things up with the SRs, and now it's working perfectly fine. But other than that, let me see if there's anything else here that I need to look at. So let me just scroll up real quick. Peter said, this was posted on the MFF Discord this morning. Final update on the CFD price feed switch. The new feed will be completed at rollover today. Prices, spreads, lot sizes will be the same. What you will experience is a higher tick count. The number of times price changes will be approximately 4 times more than the old feed, causing price changes to be more calm and less erratic. This feed is as raw as it gets, and it will not have any potential freezes. Well, hopefully that's true, and MFF doesn't have issues. I don't know. It's weird because you'll see stuff like this with like other companies, but FTMO doesn't have any of these issues. Maybe it's because FTMO is on their own server, but I mean, who knows? I can't really trust MFF right now, especially with yeah, no, exactly. CT says usually means price will not jump. I don't think the issue is with price jumping though. The prices with the issue is with their execution times, because I took the same exact trades for all of my other accounts, and there weren't really price jumps. It was just execution times were a bit off. So we'll see. I mean, we'll see when we'll see, right? Because we don't know like if this is actually going to be beneficial or if it's going to be worse. Because that's what happened with TFF. When I did TFF, I passed within like a couple days, and then as soon as I got on the real server, they I mean, their whole thing kind of screwed up. Like it literally blew my account because execution times were off and slippage was just insane. And you guys remember that from before, right? Like I was making like full profit on my FTMO, and then TFF would be completely opposite. So I don't know. No. Let's see. CT said about MFF used on servers, Trader Globals group. Honestly, I don't know. From what I heard from Patricia and like from other people in the group, I mean, they've been keeping up to date with like what's going on their servers because they're trying to start their own funding company. So I have no idea. Maybe they have their own servers. A lot of that stuff is still white label. Like I've never even heard of Traders Global Group. Let me check real quick. Traders, that's what their thing's called, right? Traders Global Group. I don't know. This looks like a scam company too. If you guys look at Trader, this is what their I think it's called, right? Traders Global Group. I don't know. It looks like it. Yeah, it looks like the logo. This looks like a scam company too. Whenever these companies have like stock photos like this, I can never trust a company like that. Like they literally Googled a person on a computer, and then this is their book consultation photo. This person is for sure a stock photo. This is definitely not their office. See, when you see companies like this, like Traders Global Group, I'm pretty sure Traders Global Group uses, it's just another white label company, right? Like ACAP look more like a legit company compared to like, look here, I'll just show you the difference here, guys. So I'm gonna go over a couple. I mean, ACAP kind of looks kind of scammy too, honestly. A lot of these companies look scammy. So ACAP here, I mean, maybe this is a stock photo, maybe it isn't. I've seen photos like this before. I don't know, maybe. But they don't make it look as scammy as like the other companies, right? Like this over here, Traders Global Group that MFF uses, this looks like a total scam company. I mean, they've been paying me out, so I don't care. But look, these guys aren't even trading. They're like on freaking Windows Word, MS Word over here. It's just funny when you guys look at these. Let me see their other photos here. Like these guys aren't even trading. They're like in a random meeting with Outlook open. I don't even know where this photo even came from. They're like in a bar. It's like who chooses these photos? This is a trading company that's supposed to give trading data, but I mean their photos aren't even the same photo from earlier. But I mean, who knows? Who cares? I mean, I personally, as long as they pay me out, like MFF has paid me out before in the past, that's all that really matters. I don't care what company they're using, what data they're using. As long as they pay out, that's really what matters to me, right? I mean, they can be using Traders Global Group and they could be a complete scam company, but if they're paying people out, then it's all, it is what it is. So if you look at a real company, like something like this, right? Like IG is considered a real company because they are regulated, right? What's another company? Forex.com. It's another company. TD Ameritrade. Right. So if you guys look at any other companies like this, like these are actually like real photos. They're not like stock photos. TD Ameritrade, Forex.com. Forex.com used to have a scammy looking page, but obviously, you know, once they got regulated, it looked a lot better. Forex.com used to be like a subsidiary of IG, I believe. I don't know if they still are, but I remember before they used to use the same data. So I lost track of what we were even talking about, guys. But let me see. CT said I traded with ACAP, passed the eval and verification, told me after that I didn't trade the style they like. No funded account. I showed CSUK all of it. Yeah, that's another sign of a scam company. But yeah, so all in all, this all comes back to what I was saying earlier. Just use FTMO, right? MFF is fine in my opinion right now until like they stop paying out. If they start having issues with payouts, then I'll let you guys know and you should probably stop using them. But they're still not on my recommended list. The only company that's on my recommended list is FTMO. So until I find consistency with MFF and TFF, then you know maybe at some point I'll recommend them. But I think right now it's still FTMO. Scrolling up real quick. CERN said he would quit his job tomorrow. TG Falangi said I'd quit my 9 to 5 before I even got funded so I can catch the New York Open. No regrets. Exactly. Falangi said, I'll be honest, I've been trying to work my way up the combine smaller accounts to work on my psychology. I have to try and make more variations in daily trades to make it worth it. But it has been one heck of a roller coaster. I would definitely trade 1 or 2 a day because it's easy to get greedy and see that things aren't really there. And I agree with you too, Solange. You start to fall into trades, you want to overtrade. Like even today, I kind of overtraded a little bit because I was trying to recover my loss from today. That's why I cut out. So for example, right here, I had the loss from earlier, I had the win from earlier, and then I took one more trade. I was still in the negative. I probably could have taken one more trade, but I just cut it out because I already knew I was trading I was revenge trading. I was looking to FOMO because I wanted to make this loss back. Even for example, right here, I could have taken one more trade and this would have been back to net positive. The only reason I really stopped was because my MFF was already in profit, both of them or three of them. And it would have already covered my losses. So even though all my accounts are not in positive, overall net profit was still at 2,690. That's why I kind of just stopped. It's just really, it's key to be able to catch yourself when you know you're going to revenge trade or overtrade, because you can just be digging a deeper hole for yourself if you don't. Yeah, let me see if there's anything else over here. And Natasha, I just saw your so guys, on the YouTube, you're not going to be able to, get into the chat. You need to be on the Zoom. So just make sure that you're looking in the premium group. Because I know you're in the group, Natasha. Let me see if you're here. I'll just forward it to you real quick. So I'm assuming you have some questions. Yeah, just make sure you guys are joining the Zoom and not the YouTube. I mean, the YouTube's free, but you're not gonna be able to ask questions. I'm gonna respond to Steven over here. Let's see. So Steven said, if I use 5 lots for scalping entries, we have daily. Is the trade close at 500 or more? Was this from today? I said for which daily? Said so it's different for each. Yeah, no, it's definitely different for each. So I don't know what Steven was confused with, but earlier he asked me if like using 5 lots for scalping entries on the daily strategies would be different. There's like 5 different daily strategies, guys. I'm sure most of you guys know, but Steve was kind of confused. I was like, which one? The 1 minute, the daily, the 10-minute, or the 5-minute? And he didn't realize that they were different. So another thing to just keep in mind, right? Make sure that you guys actually know what you're doing before you take anything. Let me see his other question is. Steven said, is it safe to take a few variations? Nope, I wouldn't. Steven is asking, is it safe to take a few variation trades for Asia today? I said, nope, I wouldn't. I can't even tell if Steven's messing with me sometimes. I don't know if you guys can tell or if, but yeah, no, yeah, what Solange said. Solange said 1,500 pips on the 5-minute was, I mean, yeah, that'd be crazy if you were taking that big of a move for something that small, especially on the 3-minute. It would, I mean, that's a pretty far move. Natasha said, thank you, Sean. I was lost. Didn't want to be in the YouTube session anymore. Yeah, no, you're fine, Natasha. I knew you were in the group, so I was wondering like why you were on the YouTube. Just make sure that you're like focused on these. Like if you can star or pin one of these up here, just make sure you have the premium groups like pinned. Because I know sometimes you'll see in the public groups that the link will be posted there for the YouTube, but the YouTube doesn't cover the Zoom link. So all right, guys. I mean, if there's any other questions, feel free to put your questions in the chat, guys. It's 3:06 right now, so we've been on the session for about an hour. I'm willing to stay on the session longer if you guys have any questions. I just don't have anything to cover right now. I don't know if there's anything specific you guys want to see, but my main recommendation would be that you guys focus on mastering these SR entries, right? We're still in summer right now, so the volatility still hasn't picked up quite yet. So I don't really recommend taking anything else. I mean, you guys are more than welcome to. Like today, Maddie took a couple variations and they all won actually, but I haven't taken them myself. See, V sent me some profit today. So B was up 537 for the day. So pretty much all these sells. Here, let's see. Talanji said, I do prefer variations, to be honest, but that's just me being impatient. Yeah, no, exactly. I like the variations too, Talanji, but the thing with the market is that it's ranging so much. So if you guys saw the market from today, or I'm going to go over here, I'm just going to mark up the, here, so I'll just do this. So we'll mark up the market from market open till close. And you'll see that there wasn't really much of a direction. I mean, mostly the direction started picking up when the Fed started speaking, but this is where we'll cut it up, right? We'll cut it up from 6:30 to 8, which is when we traded, 8 to 10, and then 10 to 12. So just looking at this period right here, you guys can see that it didn't really move very much, right? This is pretty much the, flood this back. So this is basically where price moved from market open up until 8 o'clock. You know, this is like really difficult to take. It moved about 1,800 pips total for the entire session. But you guys can see that it ranged a lot here. So it's a bit difficult to take these variation trades. Let's see if we can find it here. Right. So there's a couple of variations here that came up. Like Maddie, I know he took this one right here, I believe, the double body on top. He took this one and it hit, which is good. I mean, I'm glad it hit, but obviously it'd be a bit risky. I think he also took a couple variations. I don't remember which ones exactly. I know he took this one and this one up here because he caught the tops on both. There was a high there with a green candle followed by a red, pending momentum as well. Yeah, so we took that one right there. Got us full TP. So this just goes to show that the strategy still worked fine. The only problem with it is that it's not the type of market you want to be trading in, not this type of strategy, because it's a continuation strategy. But if you're trading in a ranging market, like, yeah, sometimes you'll get lucky if you can catch the top or the bottom, but odds of it ranging is like very likely. That's why you want to be super careful about taking the variations. And also there was what's called, there was no bias. So in order for you to take these variations, you need to have a bias, right? The bias for today was pretty neutral. I mean, it still is neutral right now with regard to sentiment. So it's kind of difficult for you guys to take these variations right now, because this would be like the main requirement. You need to confirm the bias. Even till right now, the bias is still pretty neutral. Fundamentals below, but other than that, there just wouldn't be any actual trades because it wouldn't fit the criteria. Yeah, Talanji said they come up on the 3-minute and 5-minute often too. Not as accurate though. Yeah, no, and I agree. Natasha said she might have exited the group. Sure. I can check the group right now, Natasha. Or you know what, Natasha, just send me your email real quick and then I can, let's see. So it shows you're still in this group. Let me check this one. Yeah, because if you send me your email, I can probably just pull up your, yeah, it looks like you're still in the other groups. There's only like one group that you're not in, or it doesn't show that you're, no, it's weird. Actually, you might have deleted them. Yeah, actually, you're not in this group right here. And you're also not. Yeah, you did. Sorry. I was looking in the wrong place. You did. You accidentally deleted both of the groups because you're not in any of the groups. So what I'll do when we get off this live, Natasha, is I'll send you the links. I just gotta pull up your email. I just want to pull up your personal info here on the live stream. So you're fine, no problem. And if you ever have problems with that, so say for example, you guys do accidentally leave the group, you can always log into the K2 website, right? So if you go to the K2 website right here, Natasha, you just click sign in. Once you sign in, I'll show you where to find it, just in case, you know, this happens in the future, which it happens. I mean, it's an accident. If it does happen to come up or you have the same mistake again, you just need to go to the course and then click down right here for your K2 Telegram groups. All this stuff still has to be updated with the new stuff in the group, but eventually it will it'll be there. So yeah, if you need your links, just click on this right here and then your links will come up. So no problem. All right, let me see what else I'm missing over here. So I think that is fine there. PC has a question. All right, so yeah, no problem, Natasha. PC is asking about the pivot rejection strategy for scalping. Yeah, the videos on the course, PC. You scroll down right here. It should be like the first video. It's right there. SR rejection scalp strategy. We'll go over it right now, but yeah, if you need more like review on it, we've been going over it the past 4 mentoring sessions. So if you want to go like deeper into it and understand how it's applied and all the examples and stuff, because I can show you examples, you just have to like let me know what you actually are looking for, because there's a lot of examples that we can go through. So what I'll do here is I'll take everything off the chart and then I will show you guys an example of an entry applying that specific strategy for UPC, which is no problem. It's just there's so many examples that I can go through in order for me to like really pinpoint what you need help with. You know, obviously we would need a more direct question, not necessarily like, hey, can you just go over the basics? Because there's a lot of stuff here that you can cover and it's not necessarily that difficult, but pivot rejection. I don't know what you're talking about, PC. Are you talking about the pivot scalp strategy? Because we don't have a pivot rejection strategy. So, okay. Just make sure you're like, when you guys are like asking for something, make sure that it's you're asking for the right thing. Because I don't like, if I don't want to know what you're talking about. If you're talking about pivot rejection, like the pivot scalp strategies are all over here too, if you needed to cover that. But so you're trying to apply another strategy that's not for these types of conditions. So I mean, you're more than welcome to apply it, but if it doesn't work for you, we already knew it wasn't going to work for you because we're not applying that strategy right now. The only strategy that we have that's specifically for ranging markets, which is what we're on right now, is going to be the SR. That's why I haven't been applying anything else. But we can go over that strategy. I'll show you, but I just want to make sure that you're aware that it's not necessarily the perfect market conditions for it. Like, yeah, the market does range from time to time throughout the season, but you're not necessarily going to find it where it's consistently ranging. But yeah, we can go over it. So what PC wants us to go over is the pivot scalp strategy. I mean, it wouldn't matter if we're doing pivot scalp or if we're doing pivot intraday. It's the same strategy. It just doesn't make a difference how it's, whatever it's used for. It's just the only difference would be the TP stop loss. So let's go over here. I'm gonna go to this clean chart. So in order to apply that strategy, you need the K2 pivots, which are all of the pivots. Wait, sorry, I'm trying to figure out which one you're referring to. So let me just go over your question again, PC, because the pivot scalp, and are you talking about the one on the 1 minute? Or are you talking about the one, like what time frame are you applying it on, PC? I just need a little more detail because there are different pivot scalp strategies. There's one that's for the 1 minute, which is a lot simpler. And there's another one, and I'll just show you guys right here real quick. So if you're looking for scalp strategies, there is the 1 minute pivot scalp strategy. If you're just looking for the pivot strategy, I mean, because there's different ones. If you're looking for the pivot strategy, yeah, there's like a whole bunch here. That's why I was kind of confused with like what you're referring to. there's a pivot strategy and then there's a pivot scalp strategy. So 1 minute, I think you also have, okay, 10 minute, perfect, yeah. It's aligned you to the snipe. It kind of aligns with the snipe, but it's not the same thing. The snipe's actually better. I like the snipe a lot better because there's more requirements to it. This one is a lot simpler. It doesn't require the SRs, but it works, it just works just as good. So let me see if I can find the requirements for this strategy here. Yeah, I know it's not necessarily confusing, but it like for this specific strategy, there's not necessarily very much to let me go on 10 minute to really confirm, because this is one of the like super earlier strategies that we used to apply. So I'm going to show you an example right over. This is too late in this, or I'm just going to go forward. I just want to make sure we're not too late, too early, or too late in the session. This one right here is during New York, London session. Let me just see if I can find the requirements here. So pivot scalp. I think it's been so long that we've applied it that it doesn't even, it's not even on here anymore. Yeah, this would be considered the intraday because it's only 10 minutes. So let me just pull up the actual video. Pivot scalping intraday. I'm just going to fast forward to get the requirements. Yeah, so as you guys can see, this is like before TradingView even got updated. I think the last time I applied the strategy was like back in like 2019. It still works. It's just I haven't really followed up to see if there's anything else here that needs to be adjusted, because this was done on the higher time frame. It's the same strategy, it's just done and there's a different TP stop loss for it. So this is the one that you would typically be using PC. It's the intraday one. The video only shows the 30-minute and the 1 hour, but you can use it on the 10. You just need to figure out what your TP stop loss is looking like. So, I mean, it's pretty simple. I just look strong trend, retracement, rejection off K2 pivot, identify momentum signal. Okay. So I remember it's not that difficult. Okay. So in order to take a trade like this, you need to identify first the strong trend, right? Let me go and just update this real quick. This needs to go back and become orange, I believe. Yeah. All right. So here's an example of like when price is in a strong downtrend, right? Price has been trending for quite some time, very strong downtrend. The reason why we don't typically use this during the summer or like in general right now is because when it does trend or when it does move directional, it keeps going and there's no actual retracement for you to make an entry, right? So you're not going to find many of these entries during these types of market conditions. If you traded like sometime in the spring, fall, winter, you'll see a lot more of these. But like for example, right here, right? Price is not trending at all right here, right? So you can go on for a long time and there'll like never be any entries here. I think there was maybe one right here. Let me see if I could measure it. No, because the trend here is not very strong at all. The trend was strong right here, but there was no entry. So it doesn't matter even if you're looking for trades at this point. Price was no longer trending once it got here. Right, PC. So let me see if I can find one over here. You can see right here, price was trending slightly, and then it went into a range. So does this kind of like, could you see what I mean by this, PC, where like you can't really find entries applying the strategy during the summer? Like, yeah, price starts trending right here, but then as soon as you're looking for an entry at this point, it just ranges for like 2 days and you can't take anything at that point. Same with this right here. Price was trending for a while because you have to look for a very strong trend, and then price goes flat when like this entry comes, because technically there could be an entry right here. However, it doesn't apply because the trend is no longer valid. It's still in downtrend, but it's not very strong. Let me see if I can find one here. I do want to show you an example though, because I want to show you that it is still possible, but it's like, it's going to be almost impossible for you to find a solid entry. If anything, I could go back to like May and I could probably show you a better entry. Okay, so there's one right over here actually. So you'll see sometimes where like the trades will actually come. So like, for example, right here, this happened because price was in a strong downtrend and it continued. The thing with this strategy is that it's a continuation strategy. So let me just go and rewind it to this candle right here. So let me put the requirements here. So this is the K2 pivot strategy, intraday, right? So first you want to confirm a strong trend using, and you don't have to use both, but this is going to be beneficial for you. So K2 pivots and K2 trend meter, right? K2 pivots all spread out and angling in the direction of the trend. I'll try to be as detailed as possible. K2 trend meter is in direction of trade. So those are a couple of things to look for there. Second, you want to confirm retracement and rejection of K2 pivots. So as you guys can see, I haven't applied this strategy for almost 3 years now, but it still comes back to me because it's such an easy strategy. The requirements are simple, easy to follow, and it was very profitable for me at one point. It's still profitable. It's just I don't have the patience to wait for these candles to close. And I'll show you why, because you could be looking, like you could be waiting for a trade for like hours, if not days, and it'll never come. So this used to be one of the strategies that I would call signals off. Like it was a really good strategy, but you'd have to like really be on the computer like all day waiting for it to produce an entry for you. So you're looking for a strong trend using the K2 pivots and K2 trend meter. You typically only need the pivots, but obviously the trend meter would be more beneficial if you use both. Second, you want to confirm retracement and rejection off the K2 pivots. And then lastly, you want to confirm valid K2 momentum signal in direction of trend. And you can enter on the open of the following candle. I don't know what the TP stop loss would be for the 10 minute, but typically we use about 500 pips. So like 10-minute time frame, generally 500 pip TP stop loss, 101 restored. So I haven't applied the strategy in like a long time, but I'll show you an example of like how it works. So let's see, I want to see if there's another example here that could maybe be better. Or so actually, this isn't how the TP stop loss works. You have to set it at the previous swing. So TP stop loss set at previous swing. There's no fixed TP stop loss for this strategy. TP equal distance away or 120 restored. So I'm going to try to find like a very clean entry here that you can possibly follow. All right, so this one here, there'd be an entry here, but this is kind of not a great example because I want to show you one that's like that actually aligns very well, which is going to be this one over here. Right. So, okay, let me just turn off a couple of these indicators. We don't use the high-low. We use momentum. But let me just show you, for example, when we're confirming the trend. So for the first requirement here, yeah, I know exactly. Talanji just commented in the group. He said back then people were using it on Forex too, LOL, on the 4-hour. Yeah, this strategy was not meant for US 30, but it does work well on the shorter time frames because it's a continuation, a trend. It's a trend-based continuation momentum strategy. So US 30 moves like about 100 times faster than Forex. If you want to trade Forex, the strategy still works good, but we were using it on like the 1 hour and 4 hour. For US 30, you can use it on the 10-minute because this is like equal to using it on the 1 hour or higher when comparing it to Forex. So just going over the strategy again, you want to confirm a strong trend using the K2 pivots. Let me just hide the candlesticks right here to show you what it looks like. So in order to confirm a strong trend with the K2 pivots, you want to see that the pivots are spread out. They're all angling in one direction, right? So as you can see right here, pivots 1, 2, and 3, and 4 are all angling to the downside and they're spread out, right? They're not crossing over. They're not touching each other. It shows that price is in a strong downtrend. You can see that the trend started up here when it crossed over. And then once it established, it just kept continue dropping lower and lower. So for requirement 1, you can see here that it's in a strong downtrend. For the second part of requirement 1, you want to confirm that the trend meter also matches. So the trend meter down here is red, pivots are bearish. This confirms the first requirement. With that said, you can move on to the second requirement. Let me turn the candles back on right here. So what you're looking for is price moving in the direction of the trend. You want to look for retracement, which happens right here. Price is retraced. And this might look like a break and retest strategy, right? That's what it's meant to be. So this is meant to be a break and retest strategy, but instead of using structure, you're using the pivots, which are dynamic. If you turn on the K2SR here, you'll see that there's structure around this area, but not necessarily where you need it to be. Price this push up doesn't necessarily get to this point here. So what you're using for this type of strategy is you're using a dynamic SR zone. So first requirement met, we're looking for a strong downtrend that's been identified here. For the second requirement, you want to confirm a retracement and rejection off K2 pivot. So for example, right here, price is in a downtrend. The retracement happens right here, pushes back up, rejection off the K2 pivots right here. And that fits the requirement, right? Strong downtrend, retracement happens here, rejection happens here. We move on to the third requirement. Third requirement is confirm a valid K2 momentum signal in the direction of the trend. We're looking for a sell here. So we do have a sell at this point right here. And that would be your entry. So another tool that I've introduced, which will be very useful for you if you're applying this PC, is the K2 high-low indicator. I didn't have this before, so we didn't really, it was difficult for a lot of people to identify where the swing high was. I knew where it was because I knew where to identify it, but a lot of people kept placing them in the wrong place. Like for example, for this strategy right here, you could place your stop loss at the previous swing, which would be right here, right? 73. What happened with a lot of people is they wouldn't see this as the high because they didn't know how to identify the highs properly. They would put it somewhere over here, which is okay. I mean, it does work too, or they put it up here. But if you want to put it in the proper place, it'd be right there at 730 pips. So 730 pips right there. Turn that off to clean it up. And this is pretty much what the entry would look like, right? You have the downtrend, you have the retracement, you have the rejection, you have the valid sell signal. With that said, you're expecting price to continue on lower. It's a continuation strategy. You pretty much let this run. You can see that it takes quite some time before it makes its way down. And this is why I stopped applying the strategy, because I just didn't have the patience to be waiting all day for it. I mean, it works very well and it continues to work, but I mean, I'm not trying to be on the chart for like 6 days trying to get one win, right? I'm trying to be on the charts for like 1 hour and make as much profit, if not more, doing minimal work. So here's an example of strategy right here at PC. Is there anything here that you're confused with? I just want to make sure that you have like a good understanding as to how it works. If you have any examples where you're still kind of confused, you know, I'm willing to help you with it. I just need to figure out which trade you're taking or which one are you confused with. But I think this example would give you a perfect breakdown of as to like what the requirements are and how everything's applied. The main difference here is that you now have the K2 high-low indicator. So this is going to provide you the ability to identify where the swings are. PC is asking, did the rejection take place before the red momentum signal? Yes, because these requirements go in order. If you don't have a retracement or rejection, you don't move on to step 3. So you wouldn't even be looking for the momentum signal until you have that rejection. The rejection is, or the momentum. The momentum is where your entry is based off. So for example, right here, I'm just going to go back to the entry. If the requirement wasn't met there where you had the rejection, you can't take a trade, right? Because you can't move on to step 3. So yes, short answer to your question is yes, the rejection did take place before, because that's a requirement that has to happen before you can even look for a momentum signal. So I'll go over the requirements again. We confirm the downtrend here. Pivots are inkling down, pivots are spread out, trend meter is red. That's going to confirm requirement number 1. Requirement number 2, confirm retracement and rejection. So let's see, follow-up question for PC. PC is asking, so should the momentum signal take place immediately after the rejection? No, it doesn't. It just needs to come down from that point. So see how price pushes down and then pushes up. It can happen like a bunch of candles later. You just need to make sure that it comes straight from that point, because these all are like checklists. Like you need to make sure that the rejection happens there and then it goes down, and then at some point you get the momentum. You can't have price come down, come back up, and then invalidates the rejection, and then you take it at some point down here. Let me see if I could find an example for that, because I know what you're talking about. You're wondering if like you need to have it like right after, but you typically don't. Let's see. So this is like not the best example, but it does fit the criteria. All right, so let me show you this. I think this might be a better example for you. So again, right here, there is no exact candle. Well, where'd you get the 3 candles from, PC? Because I think you might be confusing the videos. I mean, it depends on which one did you watch it from, or which video did you learn the strategy from? Because I want to clear up whether you're looking at a different strategy. Because I'm not sure if we're even talking. Are we talking about the same strategy? Because initially you said like pivot rejection and then pivot scalp, and then now we're on the pivot intraday, right? So there's like, I don't know if you're like confusing the strategies, or because there's no you don't have to wait for it any, like there's no specific number. Yeah, Talanji said I think he's thinking about the snipe, but now he's adding triple confluence. So PC said we're talking about the same strategy. So I personally don't remember a requirement. I'm trying to figure out like, where did you get that requirement from? Yeah, it's long. You said no one has mentioned the strategy in ages. So is there a video where you got that requirement from PC? I just want to make sure, because I can't remember a requirement where there's like time. PC said I made it up. Yeah, so if you made it up, it's not part of the requirements. That's why I was confused, because I don't even know where this is coming from. The strategy is like pretty simple. I feel like you might be overcomplicating and adding like other requirements to it, but it's like super simple, right? You're just looking for retracement and rejection. That's why I showed you the first example where there was a rejection right before, and then I showed you this one over here again where there's another rejection, but there's 1, 2, 3, 4, 4 more candles past, right? There's no requirement for how many candles you wait. It can happen on the next candle. It can happen 10 candles later, right? It can happen 3 candles later. There's no specific number. So I mean, you can take it whenever. So here's another example of the same strategy, but where there's more than 1 candle past it. So we have a downtrend over here with the pivots and trend meter right here. That's requirement number 1, right? Don't overcomplicate it. Requirement 1 is done. There's no numbers in between that's required. Requirement number 2, confirm retracement and rejection. Retracement happens right here, right? Price is in a downtrend. Retracement happens right here. It swings up. Here is the rejection off the pivots, right? The yellow pivot right there. With that said, you have requirement 2 met. After that, don't add anything else to it. Third requirement, confirm valid K2 momentum. signal in the direction of the trend. This is what your trade's based off. So you can't take any trades until you have all of these met. They're all in step-by-step order. So confirm strong trend, we have that. Confirm retracement and rejection. Retracement, rejection, we have that. Confirm valid K2 momentum signal in the direction of the trend. So strong trend, retracement, rejection, K2 momentum signal. You take this for a short. High lows right here. You're going for a 1-to-1, 650 pips. Click OK, let that go. And there you go, full TP with like little to no drawdown. So does that make sense, PC? I want to make sure you get this. Like, you know, of course we're joking around here, but I want to make sure that you actually get this. I was just a little confused because you were telling me like requirements that I wasn't sure. I wasn't sure if like if the strategy, if I was doing it wrong, because you know, for all I know, I might be teaching it wrong because I haven't done the strategy in like 3 years. It still works, but I just haven't used it because. So for example, right here, if you were to take this trade, I would have to wait an hour and 20 minutes for it to hit, which I just don't have the patience for it anymore. I used to have the patience for it, but I don't necessarily have the patience anymore because I don't personally want to be at the chart for like more than an hour. Okay, cool, perfect. So is there anything else that you need help with on this, PC? If there is, let me know. Like, you know, you're not bothering or you're not like holding anything up because we don't have any other questions here. So if you want me to go over anything else, just let me know. Okay, perfect, PC. So PC is good. Talon, you said, I remember when we used to do zone to zone. Not important now though. Yeah, so that was the 4-hour SR strategy, right? The zone to zone trading. That was the strategy that I used for every single signal for our Forex signals before. That one works good too, but you know, just like Talonji said, that strategy is on the 4-hour time frame. Like for that specific strategy, I was on the computer every day at the same time, right? I was on the computer at, what was it, 2 o'clock, 6 o'clock? Honestly, I don't even know anymore. It's been so long. 11 o'clock. Oh, because we're in daylight savings. Yeah, so I was on the computer basically at 3 o'clock, 7 o'clock, and 11 o'clock every day. I was on the computer only 6 times a day, but these entries would take forever. Like if you would take the strategy in the summer, like right now, right? We would be on the like we'd basically be holding on to a trade for like almost a week. It would hit, but a lot of times it would be so stressful because you wouldn't even know like if it was gonna hit, if it was gonna like completely reverse on you the next day. It was a set and forget type strategy, but it was also a stressful strategy because unless you're like a swing trading type person, then you're going to be really stressed out because the trade will go into profit. It'll go into the negative, go back into profit for like a whole week. Eventually it would hit TP, but you'd be like tripping out every couple of days. Like, damn, should I pull out of this in profit or should I just keep it going? So yeah, that strategy is still really good though. That's like probably one of the most accurate strategies at that time. If you like to trade on the higher time frame. I personally don't, but if you guys do, that strategy was a good one. Like I created a whole signal service based off that one strategy. That's how good that strategy was. But I'm just not a swing trader. It would mess with my trade psychology. So I forced that strategy on myself. Good strategy, but it didn't fit my trade psychology. Let's see. Nice. Yeah, PC said he's been testing it on 10-minute time frame along with snipes. Yeah, so if you're trading on the 10-minute like PC, there's a couple strategies that go hand in hand together. It's going to be pivots, the pivot strategy that you went over, and the snipe strategy, and sometimes the intraday, because all of those line up. They kind of become a triple confluence. The snipe is like a triple confluence because it lines up with that same strategy that we just went over, PC. Natasha said, I wouldn't use this strategy on a challenge. Yeah, I wouldn't either, Natasha, because the thing is, if you say, for example, you enter that strategy on a Friday, say Friday morning, and it doesn't close out in profit by the end of that day, you're going to be screwed because the market's going to close and you have to pull out of the trade. So yeah, I think the main reason I kind of went closer to scalping is because a lot of these challenges don't work good for entry or swing trading, right? Because you can't hold the trades for that long. And if you do, it cuts into your daily loss. So although these trades would hit, I mean, it'd be like impossible for you because you would just like never be able to close out of the trade sometimes. So for challenges, scalping is the best in my opinion. If you want to use a funding company, unless you're doing like the swing account, which it just doesn't make sense to me because you're trading such a smaller account when you can just be doing something bigger. Yeah, Peter said scalping is the best. I think overall scalping is the best because you know right away if you're going to win or lose. You know, and if you do lose, you'll bounce back from it. As long as you guys can trade your discipline and not revenge trade, I think scalping is probably the best way to trade, in my opinion, right? Everyone has a different opinion. I already know people are going to hate on that opinion, but you know, that's for me, that's what works best. Yeah, Natasha said, I just want to do the scalping. I'm getting better at it. Yeah, no, it takes some time. You know, I've been trading for like 11 years, Natasha. So you're not going to get this tomorrow, right? If you get it within a year, then that's amazing. Like Maddie, he joined K2 last year. Like it's been like a year now. Like Maddie's only been trading with me for like a year, and he's like pretty much mastered the scalping, right? He's like on the sessions, basically like my little assistant, telling me like when these scalps are coming up. And Maddie's only been trading for a year now, or less than a year. The thing with him is he's very consistent, and he doesn't go off and try to learn different things. He just sticks with what I teach and what we cover here, and that's how he's able to master it so well. Yeah, no, definitely. Natasha said yes, and I love it. I'd be reading his comments on the live. Yeah, no, definitely. Maddie's good. I mean, he's really good. He like never traded before in his whole life. He just hit me up randomly like last year, and then he was just like, oh, I want to do this, and then he did it. He actually listens, so it's good. Yeah, no, definitely, Natasha. Yeah, I mean, if there's anything that you need help with, you know, just come with questions and we can cover whatever to help with your scalping. I think the main thing with scalping is really trade psychology. If you guys can't get the trade psychology down and you can't really stay disciplined to like get out when your TP hits or get out when your stop loss hits, then that's really what's holding a lot of people back with scalping. Because the thing is, if you can scalp 1 or 2 trades a day like I do and just win every trade, I mean, it's like literally that's all you need to do. It's like you take 1 or 2 trades a day and you can make a ton of profit. The main reason why people mess up is because they don't put a stop loss because they get greedy or they overtrade. You really need 1 or 2 trades a day and that's it. You know, you don't. Not everyone can be Kevin, right? Not everyone can take like 20 trades and have them all win. So you just got to make sure that you have that discipline to, you know when to cut it. But let me see. All right. So I think that might be it, guys. If there's any other questions, you know, feel free to put your questions in the chat, guys. We've been on this session for about 2 hours. I wasn't expecting it to go this long, but I don't mind it. I mean, you guys helped me out a lot. Thanks, PC, for bringing up the pivot strategy because I totally forgot about that. I think that's the best part of K2. Like a lot of you guys here join K2 and you ask questions about a lot of these older strategies, and it just reinforces my knowledge. So like it helps me get better at trading because I'm like relearning stuff that I learned years ago. And I'm able to like reteach you guys, right? So the thing is I get better at my own strategies and you guys help me improve them. So it just goes back and forth. You know, it's a two-way street. I get better, you guys get better, we all get better. So I think that might be it. Yeah, Natasha, I'll send you the links right after. Actually, let me check real quick. I think it's because your username is Tasha on the thing, right? So I think that might be it. No, that's weird. For some reason. Yeah, I don't know what's up with that. I'll send you the links though, Natasha. And then if they don't work, just let me know. But I'll send you them shortly. What's your username on here? Yeah, Tasha Johnson, you should be fine. It's all right. Well, I'll send you the links right now. But all right, guys, I think that's it. If there's any other questions, you know, feel free to email me or message me on Telegram. Otherwise, I'll be back here tomorrow morning for the next live session. And we'll continue on with this trading week. So other than that, guys, I will see you guys in the morning. So have a great rest of your night, and I'll catch you guys in